This week on the Business Owners Corner, I want to cover a topic that comes up really frequently in our financial planning practice over and over and over again. A lot of business owners, particularly across the trades, kind of struggle with what to do with cash in the business bank accounts because there is such a thing as having too much cash in the business. And a lot of people that we're talking to that may have had a couple of good years, money is coming into the business, it's accumulating in the business bank account, but then you're not really sure when or how to take it out of the business account and what to do with it at that point. So I wanted to talk about that for a couple minutes today because it is really important to manage that cash effectively. And the reason is that we're in an inflationary environment right now. I'm sure you're seeing the cost of materials just go up. Energy, gas prices are going up and up and up. And across the board, the cost of goods and services that we like to consume are going up around 7% per year. And what that means is if you have extra cash sitting in the bank account, guess what you're earning on that cash right now? It's pretty close to nil, right? It's maybe 1/4% per year. And so any extra cash that you have sitting in the bank account is only earning 1/4% per year, but the cost of all the stuff that we like to buy is going up by 7% per year. So you're losing ground in purchasing power to inflation anytime you have more cash than you need sitting in the business. So one of the main questions we get around this is, well, I'm not really sure about how I should take this out, and I'm concerned about being taxed on that amount. Well, in plumbing businesses, most of them are sole proprietorships, LLCs, or S corporations. Typically, we see S corporations more frequently when you have employees working for you. You don't have to have an S corporation if you have employees, but all three types of those businesses are what are called pass-through business entities. And so if you make an extra $100,000 in a certain year, if you keep it in the business account, that $100,000 is going to be taxed to you as the individual. If you take the $100,000 out and put it in your personal bank account, it's still going to be taxed to you as the individual. It doesn't matter whether it stays in the business or whether it goes out. So that being the case, we need to figure out how much cash we need to keep in the business at all times. And then anything in excess of that, you got to be doing something more efficient with it. So I'll get to what that is in just a moment. But typically, the way that we think about this is if you know in your business that your monthly expenses are going to be $10,000 a month. I'm just pulling this out of thin air. Take your books from the previous year, take your profit and loss to your income statement, take the expenses, divide them by 12. That's a pretty good start. Now, maybe you're growing. Maybe you're adding employees. Maybe you need to go out and buy a truck or some other equipment or something like that. Well, you can be more scientific with this and incorporate upcoming expenses as well. But if last year you had $10,000 a month of expenses and you need to hire somebody at $5,000 a month, maybe you add 5,000 to that. If you need to buy a truck coming up, you incorporate that too. So typically we like to keep anywhere between 3 months and 6 months worth of our monthly expenses in the bank at all times. We don't want to take all the cash out of the business account because if you're tight on cash, you can't pay the expenses. That's a big problem, and we never want to be in that situation. So depending on where you're comfortable, let's call it 6 months worth of cash. If you have $10,000 a month of monthly expenses now, multiply that by 6, you get $60,000. Well, if you have $5,000 a month because you want to hire another employee, take 5,000, multiply that by 6, that's 30, add that to your reserve. So now we've gotten to $90,000 of cash you want to keep at all times because that's your upcoming monthly expenses. If you need to buy a new truck for $30,000, add another $30,000 to that. Let's say that you've got a few employees, things are going pretty well, and you have $200,000 of cash sitting in the bank account, but you only need $100,000 of it based on 6 months worth of your upcoming expenses. Well, you have $100,000 too much sitting there. And that $100,000 is losing purchasing power to inflation every single day that it sits there. So with that extra cash, we need to be a little bit more thoughtful with it. And you have options. You can find a deductible expense to fuel growth or do something else that you want to do in the business. That's an option to reduce taxability of that money. You can contribute it to a qualified retirement plan. There are limits and rules surrounding that, but if you don't have a 401k or a SEP or a simple IRA, something like that, that's something that you might want to look at because every dollar that you put in is deductible. If you've already checked those boxes or aren't interested in that, well, you still have $100,000 too much sitting in the account. And it makes a lot of sense to take that, put it in your personal account, and then do something more effective. Maybe pay down debt, maybe invest it, maybe buy rental properties or something like that. There are a lot of options. The point being, there needs to be some kind of distribution strategy for your business cash because you can have too much, and every dollar too much that you have is losing ground by the day.